To this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it's the third straight day of sell-off on the Lal Street. In fact, if you look at the Sensex of the last 3 days, it has shaved off somewhere around 1600 points. And for the Nifty as well, just about managed to shut shop below that 19,750 mark. In fact, if you look at the broader end of the markets, both the Nifty mid and small cap indices that were kind of outperforming the benchmarks yesterday have recorded cuts of somewhere around 1% or thereabouts a piece. Among the sectors, most of them were in the red. In fact, all of them were in the red, led by the PSU banking pack that was bleeding in trade today. Shaved off somewhere around 2.5%. You have the likes of autos that didn't do all that well. In fact, realty was another pocket that was under pressure. Aside of all these sectors, if you look at the top losers on the Nifty, you had the likes of M&M, ICICI Bank, you had Cipla, SBI. Heavyweight in the PSU sector, SBI under pressure, and you also have IndusInd Bank from the private banking name that was under pressure. Few gainers today, including the likes of Adani Enterprises. You had Tech Mahindra, you had the likes of Dr. Reddy's, BPCL that has been languishing on the back of a surge in crude prices was among the gainers today, and Infosys is the other one that was gaining in trade today. Among the Nifty 500 losers, you have the likes of SJVN because the offer for sale has started. In fact, for non-retail investors today, and the government is looking to sell as much as 5% stake via an OFS. Stock was under pressure given the fact that the OFS floor price was fixed at a very steep discount of 15% to yesterday's close price. You have the likes of NHPC, UCO Bank, Central Bank, all of these mid-cap PSU banking names under pressure after the kind of stellar run that they have seen over the last month or so. Among the gainers, you have KSB Pumps, Gujarat Ambuja Exports, Adani Power and the likes. But, to put into perspective where we are headed from here, let me introduce my guest for today. Joining me is Nilesh Jain of Centrum Broking. Good afternoon, Nilesh. Thanks a lot for joining in. 19,750 taken off on the Nifty. How bad can it get from here? Do you expect some kind of a bounce back to kick in, or do you think there is more pain to see going forward?
Very good afternoon, Nandita. Well, if you look at the overall structure in last 3 consecutive sessions, we have seen good amount of correction. I would call it as a healthy correction, which was very much due. And if you look at the September series, we started on a positive note, and we saw almost 1,000-point rally from 19,200 to almost 20,200. If you take the retracement of this entire rally, then 61.8%, that's a golden retracement that now comes around 90,600. So that's the only hope now we have, that could be a make or break level. Cluster of support can be seen near about 19,600. If you look at 21 and 50-day moving average, both are lying exactly near about 19,600 to 650 zone. So from here on, I think somewhere we are near a support zone, and there could be possibility of a strong pullback in the Nifty index. And if at all Nifty takes out 19,900 on the upside, then we are very much likely to witness a short covering move which will open upside towards 20,000 to 20,200. But for the time being, on immediate basis, I feel there will be another 100 to 150 point downtick which you might see going forward. If you look at on the other end, Bank Nifty, which looks slightly more weaker compared to the Nifty index, today it has broken its crucial support of 45,000. Now it seems like it is heading towards 44,300 to 44,000 zone. And important level just to highlight that 200-day moving average for the Bank Nifty, which is placed at 43,000. So that will be a major support zone. But I feel that Bank Nifty is likely to lead this particular fall from here, and it may test the levels of 44,300 to 44,000 going forward. Lastly, the volatility index, however, on the contrary, it is very much in the comfort zone for the bulls. And today as well, in spite of the selling for the third straight session, we haven't seen any spike in the IVs. So that is certainly giving a contra sign. So somewhere we are near to the short-term bottom, but we need a strong reversal on the chart.
Right, some bit of a downtick expected, 100-150 points on the Nifty. But you mentioned Nifty Bank, of course. HDFC Bank has been under pressure since yesterday, of course, after concerns of a major overhang of the merger rather that has weighed in on the stock. Brokerages have slashed the target prices as well. And today as well, it has extended its losses. On the charts, do you see a more downside going forward for HDFC Bank? And if yes, what is the kind of support levels one should work with?
Well, yesterday we saw a big gap down opening in the HDFC Bank with a big bearish candle, and at the same time, it has also broken its crucial short-term and long-term moving averages. So important resistance for the HDFC Bank is placed somewhere near about 1620. So for any sort of trend reversal, the HDFC Bank needs to take out 1620 levels on the upside. On the lower side, since it has given a good fall in last three consecutive session, it is approaching near its crucial support of 1500. So at current level, I feel the risk and reward is slightly on a favorable side for the long position from trading point of view. However, we might see some consolidation in the broader range of 1500 to 1620. So any decline from here could give a good opportunity to make a long position and take a contra bet, keeping stop loss below 1500.
Right, that's you HDFC Bank. But let me also talk about some of the auto names. M&M top Nifty loser today, but the stock has hit a fresh high recently. Maruti, of course, holding steady above that 10,200 mark. And the management was on CNBC TV 18 today has said that the festive season is expected to do well. In fact, it expects large volumes in the month of October as well. The kind of intermittent dips that we see. Do you think these are some of the buying opportunities for some of these auto names? Should one look at these stocks from a trading perspective now, or would you say that accumulate for the long term?
Well, absolutely, Nandita. If at all we see any decline on the back of profit taking, I think that would be a good opportunity to make a fresh entry, because the major undertone continues to remain on a positive side for the names that we have just spoken about. The Mahindra and Mahindra, if you look at this particular counter, it has a good support of 50-day moving average somewhere near about 1540. So from here, any decline could be a good opportunity, keeping stop loss below 1540. One can take a contra bet, and we can expect further move to continue towards 1600 to 1620. Apart from that, Maruti, we have seen a good breakout above 10,000 earlier, and it is very much sustaining above that 10,000 mark. So as long as it respect and defend 10,000 mark on the closing basis, I think any decline from here on could be a good opportunity to make a fresh entry on the long side in the Maruti as well. So overall, from Autopack, we are slightly on a bullish side. If at all we see any reversal in the trend, I think autos are likely to outperform.
Right, talking about the auto industry, let's talk about tires now. Apollo Tires was under pressure given the fact that there's been some disruption at its Gujarat unit. But JK Tyre, on the other hand, yesterday, we had DAM Capital initiating coverage with a buy rating, sees an upside of 23% on the stock. So among the two, or between the two, JK Tyre and Apollo Tyre, would you take a bet on JK, or would you say that Apollo looks good on the charts even though these disruptions have occurred for the short term?
Well, Nandita, if you look at the overall major structure for the Apollo Tyres, we have already seen an outperformance some time back. And after hitting highs near about 430 to 440, now currently we are witnessing some consolidation. Although the bias is slightly on a negative side from a short-term point of view, but if somebody is looking to make an entry for a long-term bet, I think it's a good opportunity. Purely from trading point of view, I think it is better to avoid. I would rather go with JK Tyre because the momentum looks strong on the daily time frame chart. Yesterday we saw a good breakout. Today, although due to the market volatility and weakness in the market, we saw some profit booking in JK Tyre as well. But overall, the major structure for the JK Tyre looks slightly on a positive side for the upside target of 280 to 285 can be bought at current level and on decline, keeping stop loss below 255. I think the structure from trading point of view looks positive for JK Tyre. From positional point of view, Apollo Tyre can be added on declines.
All right, that's the view. JK Tyre preferred over Apollo Tyres. Let's talk about SJVN, Nilesh. Stock has literally given returns of 160% over the last 6 months. But of course, government's OFS that is open and the floor price that was set at a steep discount to the current or yesterday's close price. How do you view this stock on the charts now? Do you think this is a good opportunity to buy now, because it has corrected quite a bit in today's session?
Or we may see some more correction, I think, because it is trading in over territory, and we have already witnessed a good spurt in last 6 consecutive months. So from the levels of 30, it has reached almost to the levels of 82. So now I think it is better to wait for some more correction. The buying range could be somewhere near about in the range of 65 to 67. So that could be a good entry point. At current level, I feel there may be some more correction. So if somebody is already holding the long position, can keep a stop loss below 63. If somebody is looking to make a fresh entry, I would rather suggest to wait for some more decline towards 65 to 67. The upside is although open for 75 to 78, but I think still at current level, the risk and reward is not favorable.
All right, we did wait out for more dips when it comes to SJVN. But let's talk about Happiest Minds. There were reports that the company is looking to revised its FY24 revenue guidance lower. However, the company has said that it hasn't really done that. Stock was under pressure today. How is it looking on the charts? Is it a good play, at least for the short term, or would you say look at other mid-cap IT names?
Well, this particular counter has disappointed, and from last 1 year, we have seen a lot of consolidation. So, a big time-wise correction we are witnessing on the chart. If you look at the crucial support now, which is placed at somewhere around 820, so that should be the stop loss for the long position. Although we are not recommending any buy at current level because the structure is indicating some more consolidation to continue. So, I would rather wait for a breakout above 965. Then probably it will be considered as a breakout from falling trend line. Then the upside will open up for 1020 to 1050. But as of now, at current level, it's in no trading zone. If somebody is already holding the long position, can keep a stop loss below 820 and stay put.
All right, that's the view on Happiest Minds. Let's also talk about some of these mid-cap PSU banking names which have come under pressure today. The likes of Central Bank, UCO Bank, they have seen a stellar run. In fact, their valuations have even crossed that of their larger peers, right? So, the kind of drubbing we saw yesterday, I mean, rather today, do you think this presents an opportunity, or do you think there's some more correction to come given the fact that they have gotten a little overheated after the, up move? Rather multifold jump that we have seen in the share prices on a YTD basis?
Well, Nandita, within PSU banking space, we have some conviction in the large cap names like State Bank of India, Canara Bank, and BOB. So even at current level and on decline, State Bank of India is providing a good opportunity because the upside is still open up for 620 to 650. And from position point of view, I think this particular counter has the potential to move towards 700 plus. So in this kind of correction, I think it is better to stick to the quality names like SBI, and the support is somewhere near about 565. That should be the stop loss for the long position. If somebody is looking to make a fresh entry in mid cap and small cap names, so Bank of India is another counter that has given a multi-month breakout on the weekly chart. So that is also looking positive for 115 to 120 sort of target on the upside from near-term point of view. Can be bought on declines and also at current level, keeping stop loss below 102.
Right, one stock I will talk about is BLS International. Given the fact that India has suspended visa services in Canada, the company has said that Canadian visa business rather contributes somewhere or less than 2% to its overall annual revenues. But given the fact that there are tensions with Canada that's simmering, do you think that will remain an overhang on the stock, and perhaps the stock could go lower from here?
The structure is indicating that we might see some follow-up selling in the coming sessions, but the major undertone continues to remain on a positive side. We have seen the secular uptrend can be seen on the weekly time frame chart. So after hitting lows in the year 2020, somewhere in the month of May, the low that it made of 7 rupees, and from those levels we have constantly seen a head up and haberton formation. So structure looks very strong. Stock may rebound going forward. This support is somewhere placed around 240. So at current level, there is still possibility of a stock to correct another 20 to 25 points. But I feel if at all we see any decline towards 240, that could be a good opportunity to make a fresh entry. If somebody is already holding the long position, can stay put, keeping trailing stop loss below 240. The upside is very much open for 290 to 300 from position point of view.
All right, the structure for at least BLS International looks pretty much positive. With that, Nilesh, before I let you go, any recommendations from your end for the next couple of weeks that's looking attractive on the charts?
All right, so today we have seen across the board selling, but few IT names have outperformed and few FMCG counters have participated on the long side. So Tech Mahindra is one counter where constantly we are witnessing a high up and habit of formation. In spite of today's fall in the market, this particular counter has outperformed. So looks positive for upside target of 1320 to 1340 in the near term. Can be bought at current level, keeping stop loss below 1265. So that's one counter from the IT pack. We are also witnessing a reversal in the trend in the Pidilite industries. So this particular counter has a very good formation of a falling channel. So currently it is somewhere near about the lower end of the channel, has a potential to move and test the upper end of the channel somewhere near about 2550 to 2600. So this Pidilite can also be bought at current level, keeping stop loss below 2480, and the upside is open for 2550 to 2580.
All right, Tech Mahindra and Pidilite, two recommendations from Nilesh. With that, Nilesh, thanks a lot for taking our time and joining in and sharing your thoughts this afternoon.
Thank you, Nandita.
Well, with that, we've come to the end of this edition of Closing Bell. Well, I want to point out that it's the Fed's rate decision which was also playing spoil sport. Even though the Fed did stick to the script and held interest rates steady, but it's the dot plot that has indicated just about 2 rate cuts in the next year, something that could have weighed in on sentiment today, and which is what resulted in a 550-point sell-off on the Sensex. But of course, 19,600, 650 important support zones to watch out for the Nifty going forward, according to my guest Nilesh Jain of Centrum. So we will be watching out for those levels, and of course, let's see how things pan out tomorrow morning. With that, it's a wrap on this edition of Closing Bell. Thanks a lot for tuning in. For all your other news and updates, stay tuned to Moneycontrol.